All right, it's E with MarketWizards.com and eMiniWizard.com. About 3:15, 22nd of January, a Tuesday, 2019, reminding traders to use risk capital you can afford to lose. We've had a very, very pronounced sell day today. I'd said earlier today, didn't think we were quite ready for it, but we can certainly see that this has morphed south side after the initial range. We got ourselves in just below the rain line, and then we took off coming late morning on China news again to retest the prior China news, which was the launch of that was 21 below that bar. So that 22 to 17 we've suggested make sure you are paid. I like to look at both horizontal supports, and I like to look at diagonal ideas as well. When I first started out, I just looked at diagonals. That's all that I had studied really, and really hadn't grasped the idea of lines going horizontally as well that you could look at. There's a big channel that we noted, still is, so we're going to keep an eye on that. But at the time when I'd first started studying, that's all I was reading about was these, necklines, like the one that I showed on crude. These diagonal lines, and I didn't understand horizontal lines. All I was drawing was this type of stuff, and then you evolve, then you get a little more sophisticated, you keep reading. I think it was John Murphy was who I was reading that finally opened my eyes to, you better have some horizontal lines too. And so I've taken that to the next level using our eWidget. But you still can do that here. You can still see these ideas that we had drawn earlier today. And I'm assuming this is for tomorrow or the next day. Didn't expect we were going to get this kind of a push in here today. But because our primary target was, okay, maybe we can get that 32 gap. Yippee. And then undermine it and get 28s anyways. But so I'm looking at these horizontal ideas as well, and not just the diagonal. And I think if you are a trader who's trying to pick up your game, you want to see both. You want to see the power of a trend line channel. You come over and under. Look at the big basketball up here. These arches are part of trading. You've got to understand that. There are areas of no conflict, whether you call them circles of confluence or cup and handles like O'Neill or whatever. You'll notice them. So once we start that arch, which I call them, I like to call them arches, but once we start that, then you start to think, okay, maybe we can come back and complete that half circle. So sometimes we can draw ourselves some channels that make sense. Typically, you'd like to get at least 3 points on it. So back here, we can see that's a channel from Friday's range 1, 2, third touch here. And usually this is 4, but usually you like to see it, 3 drives, 1, 2, 3, just like on the upside, 3 little Indians, Linda Raschke idea. So I guess with inflation, we got 4 little Indians today. And one of the things we want to do as a trader is find out what ideas are working and what are not. And we had talked about making sure you're paid by the 17s, and we can see the importance of these ideas. So by empirical evidence, it tells us that maybe big boys understand this stuff too, and we are cracking their code. That's the way I like to look at it. And because we are in the month of January, we know that the month and the year range are the same. We can use them both. One of them just for both right now. So this is our current fighting range until proven otherwise. And last year's open, not high, open was 26.75 and a quarter. And we said on Friday that was the retest we want. In that 80 zone, be very careful because our work was suggesting maybe we could get a pullback. And who knew starting out yesterday that we're going to plunge all the way here? Certainly not me, and probably not most traders. But you have to be able to read it in motion. That's the key. And once it's moving, then you have to be able to, in real time, understand, okay, so that's resistance, next support, and so on. So we are right at the outer edge of the predictive model for today. And time and price, much better odds to make sure you paid. You don't have to buy, but you sure as heck should take profits if you're short. My son-in-law loves to say, he used to bartend a little bit. He said, 2 o'clock, he always remembered having to say to his the clients, you don't have to go home, but you can't stay here. And that's the same with this price. You don't have to buy, but you sure can't sell down here. Same concept. And this is a knife. So when we talked earlier about getting a mirror day to this, and I said, I don't think we're ready. But once this starts, then we recognize immediately, okay, we're in that mirror day. We said that at lunchtime. Uh-oh. And the worst thing you can do is lie to yourself. Remember when I posted in the room, I'm wrong. I said, I was wrong about this, not being able to get into a mirror day. I said, that's what we've got, this rabid dog day, because we never closed the half gap. So I said, Zeke likes to think that way. And I said, so we do have a rabid dog day. Now let's acknowledge that. And the sooner you can fess up and say, you know what, I guess wrong. It's more important to fess up than it is to try to, protect your ego. This is not a game of ego. This is a game of earning our VIG. And then some. Traders who stepped out after early morning and didn't participate here, who cares if they had already made their VIG and are out playing golf or shoveling snow, whatever it is they're doing. So many opportunities in this business. Now, law of proportion, you can see already, I'd said we'd come over 1, 2, 3 times. And I said, I think the odds are changing that we're going to start to step over that red line because typically you're not going to do that third time and then a fourth time and fifth and so on. So here clearly is an example of that late day where profits are being taken by the shorts. Clearly. You can tell just by the size of this bar right now compared to what we've had previous bars today. Just the size of that bar alone. RTH suggests a dime is done. Anybody that's long side should be paid 27 to 32s. And basis this chart, 2 box bounce. And I've got the 29 and a quarters up here just above it in the all day push. And in the weekly push, I've got the 32s. So you got to be paid in that zone. Doubt that we're going to break the 32 before the end of the day, but we could. But I doubt it. And don't forget, that's last year's middle. So currently, if you want to take these bars now, just borrow these and say, okay, so what are we thinking? Let's borrow them and just do it. Fighting box. Support box, make it the same size. And this is our resistance box. And because today is Tuesday, we want to use this chart instead of just the 1 day to get a better feel for it. And step by step, all of these lines that we had earlier on to show levels that we're breaking. We can see now we're back into the pipe from last week. So I'll leave this line on and I'll leave this line on because that depicts the pipe. Okay, I'll take those off for now, but get the idea. Step by step. So clearly right now, this is our primary range from last week that needs to be resolved. And that's pretty good poke. And you can see these 2 days, how today and yesterday, we've come back a substantial portion of that rise. So platform back here, big support still right there. If that breaks, that 88 opens up. And it looks to me like 17s are the ticket for perhaps the low of the day. Still got time, but looks to me like profits being taken. Hope this helps you guys at hanging out. It's easier, I know, to do a visual. I like to work the mornings with you guys, and then in the afternoon, I know a lot of you are part-timers or whatever, but I just felt it would be easier to talk about it this way live.